is it. And let's bring up Mr. Trading View. What? Oh man, look at this entry. It's insane. All right, so let's start mapping this shit, right? So what do we have currently? First, let's analyze the Dixie. The Dixie is going up. There was a breakout in the Dixie on the top of the actual range. I don't know if you see the screen. All right, so this is Dixie, so it's the dollar index. So there we go. We have this top taken from the dollar index, creating a possibility that the market or the dollar will come down. So now all the dollar associated pairs will have a reversal with the exception of US dollar, which should be doing the same. Let's give it a quick flyby. So the Dixie is correct. This guy also jumps out through here, right? So we have another possibility there. Oh man, Jesus. You didn't like the market, you say, today? This is really choppy. This is really choppy. But it's okay. All right, that's good too. All right, so let's see what we have here. We have another. Yeah, it can be ranging or trending. I mean, depending. If it reaches the trend, takes the top, then it starts reversing. So I like it to be trending too. Like what happens is that it changes, you know. I mean, it's not the best. So this is another example of shit that I'm not interested in dealing with. There you go. This is what you're referring to, right? There's a big continuation of the trend. So it's okay to have a trend, but when there's a continuation of the trend, I don't see a pullback, a market structure shift here. So this is not, oh fuck, this is not exactly the best scenario that we're looking. Same here. New Zealand dollars are all fucked up, apparently. Yeah, all right. Australian dollar. Yeah, yeah. So we got Euro CHF with the big spike here now. We have this guy too, which is New Zealand dollar CHF. I don't know what that. Jesus Christ. This is British pound New Zealand dollar. Looks pretty bullish to me. And I don't know if you see the fucking thing giving me statistics each time I see this shit. If you see this, you see the entry points here, man. One here, one here. You, you see, yeah, look, there's one here. This is break even. There's one here, break even. One here, break even. So if you would buy here where it says, and you would put the stop loss around here, and you would continue be still on this trend, we would be doing 3.72R, and you will already be break even. Well, you would no, it doesn't. It's break even because it's continuation. So then, so this is what I have. You see, I have the ML and I have the normal boxes. That's it. Still, it's shit that I think it's needed actually, and it goes back. I don't know how many. Let me see. 2,000, only 2,000. But I can put it 20,000 to go the last 13 days, and now it's formulating the statistics for 20,000 or 13 days of data. And with this, you will have here the statistics of it. It's still doing it. As you can see, it's at 78.8% on this pair, and it changes for each pair that you go. It would do 27 trades for the last 2000. Look at that. It changed. You see, it changed to 70% for the last 13 days. So last 13 days, you would do 170 trades, 70% win rate. The win-loss ratio is 2.33, which is the winning divided by the losses. And the early signal flips is the thing that I was telling you about. When this is very high, above 5, 10, means that there is a lot of noise. And you should not use this pair, This is okay. This is really okay. 7 is really okay. Yeah. So don't forget it. Look at the market. Look at the indicator, what it's showing you, and see if it makes sense. Because there's a good probability that's not going to work. So in this case, GBP New Zealand dollar. We're not interested in this shit. Next, GBP JPY. Look at that shit. One indicator that I need here, since I'm not using this, is GBP JPY. GBP. Oh my god. Basket. All right. So we got the index of the, let's see the index really fast. Okay. Index of the yen. All right. So because we have yen pairs and we have US dollar pairs, that's pretty much it. So with this, we can directly correlate and create an additional confluence for it. Holy shit. Look at this fucking trend. It's completely, look at the noise. It's zero. You're seeing this? Crazy. Yeah, there's no noise. It's just like 83% win on this shit. And it tells you right here to sell. Then you would have to put your stop loss here. And even then, it's very, I prefer to use a really proper entry point. And this for me is too choppy to enter like this. But yeah, very interesting. Okay. So, okay, let's go for the next one, right? So GBP US dollar, we checked. There's nothing taken out. GBP CH franc, so Swiss franc, British pound. There we go. GBP AUD, also interesting. Interesting. Okay, from all these pairs, what would be the most interesting, right? So Euro JPY, no range breakout. Euro GBP, holy shit, that's amazing. Look at that. This is a clear B model, A model being formed right here. And look at what the fucking thing is telling you right here. Do it. Go. Break even here, either break even here. But yeah, let's let's see. Yeah, it's very fast. It's very fast. We do this really fast. So euro, US dollar. This was the range. Oh, it's still here. Look at that. You see this? And then in here I went to bed right here. But then it still continued. And if you see right here is what I was telling you about. Right here, it tells me, oh, sell, break even. When I break, boom, it did all this flush. It's completely ridiculous, man. Look at this. If you would just drop it there like this, and boom, like that's 15R. I don't even want to know how much is that because I'll get traumatized. But here, I don't know if you see it, there's 86.2%. So that in 29 trades, 4 are losses with a win ratio of 6.25 profit factor. It's completely ridiculous and zero noise. So, yeah. So in here, what we have is a breakout in the euro, which means that if we correlate with the Dixie seems to be continuing going down, which goes correctly with our bias. If we come back here, we see that there is a great sustainability of it continuing the progress of going up and actually taking the top of the area. That's pretty much it. So now we bounce to Euro CAD, see Michael here too. Hi, Michael. And what do we have here? We have the same. I think we have a break, very tiny little thing here, you see? This tiny spiky. Beautiful, beautiful. Look at that. That is beautiful. Yeah, that's Discord shit. That's Discord problem itself. It's really bad. So there. So this is very good too. So now here UAD. We don't have actually. Oh man, look at this entry. Boom, bam. And it's coming back here to do something nasty and probably coming back. I think this is interesting model too. I put it there just to see. So CHD. Oh man, look at this. Boom. Next, I don't want to traumatize. Next, this is also not valid. AUD JPY. Okay, we don't have one that is interesting here, but there's a great look at this signal here. It's already up. You break even, and you wait for a red 1-2 pair, clear indicator, or you wait for the next one 2 pair, like this one, and then there's a second break even, and you exit on the first, for example, if you want to. Or the idea and what I would be doing would be actually understanding market structure on the M1 level and seeing if there's a market structure shift, I would just bounce out. That would be the best, I think. So in here, we have also this amazing thing here. There you go. And then we have this one too. So that's pretty much it. So we have them all mapped. Now we need to open the news. Did you check the news already? All right, so let's give it a look here for the news. Okay, so let's see. Today is Thursday. There we go. 15 is the only news appearing that is going to impact the euro. Um, that's 5 hours. So the market is clear on red news and medium news until New York. So today is the employment claims, which is the actual unemployment rate. So the price, the dollar moves always according to the unemployment rates and the inflation, like Jeremy Powell always says. Um, and what happens is that this is going to influence brutally the dollar and distribute it brutally. Oh man, look at that. That is so beautiful, man. Shh. Look at that. This is that was it. I think that was it. What time was that? 1 o'clock in the morning. So that means that at our time at 6 in the morning. It is what it is. At this point in time, I'm convicting of yeah. Well, that's a good possibility that that would be beneficial. But what we'll be keen on doing is actually entering a tree, which is here. I don't know if I have this statistical. This is the simple box, by the way. Look, this is the simple that just draws the boxes. It just it just has a tiny function to go back and shit. But that's it. That's it. Shows the boxes are not. There you go. Can make it easier than this, I think. You, yeah, you can do this too. You see. Come on, man. But they're lazy and you forget things. Like this, you get a box, fix it. There you go. You know the rest. So we what do we got? What do we have? Let's put the procedure right here. Right. So okay. So first one one evaluate the pairs for Asia high low break between 1 a.m. and 3 a.m. New York time. First thing we do. Two, check. Yes, we can of course check the news for those pairs. All right. So you see, um, like this is kind of nice to have, just to have something like structured. Otherwise, there we go. What do we need more now? After this, we need to prepare magic keys on the pairs that we just chose and have the pairs all open and the shards open so we can really enter really fast. So this is something that you can do at 7 a.m. if you're preparing to enter at 3. You do all of this already. So, prepare MT5 charts with magic keys. What? No, crazy. Nah, okay, so let's prepare MT5 charts. Okay, evaluate for this. We use indicator algorithmic simple Asian range. Right? Link in the description. There you go, right? Because it's free, people can just use it and take this shit and do this like a strategy. All right, strategy. All right, so we have documented what we did. We mapped, and we need to tag the pairs too. So all these are not color coding pairs. They're just, you can just color. I mean, you see, if you change the color, then you need to upgrade. So you don't need the premium version to map them on the watch list. You just give it a click, fuck the color, click it. That's it. Yeah, there you go. There is. You see these? These are sub levels. So you can move a pair to here and put them in a different. So this is another possibility that you can use to filter them. I can just have US dollar pairs on top and JPY pairs below, and then associate it to the JPY basket index or the Dixie, and that's kind of nice, man. So now evaluate the pairs. This is, I mean, it's, forgive me for my typing. It's too early. All right. On Asian range. Asian range. Okay. You can't read it now. That break between an AM, high lows, break between 1 AM, let's use indicator. Then we check. So now we prepare the charts with MT5. So for that, let's do this too, because this has a chapter in the video on how to set up MT5 directly for all the charts that we're seeing. And this is kind of important, I think, and how to create a profile, because I see a lot of people doing is dragging the EA into the charts and going from there, and that's so time consuming. So I'll portrait now is how to go about all these tagged pairs that are of interest for us. So they are points of interest for us, or pairs of interest for us, and link them directly here. So for here we need several charts. So major, we need US dollar JPY. Yeah. Let me see here. US dollar JPY. I don't have it here. US dollar CHF. I don't have it here. US dollar CHF. Here it is. So this is when you open, you see this disgusting thing, right? What I want to show is that you can do it with one click. Come to your templates, trigger, and you have magic keys, and the whole setup of the chart is changed, and it automatically drops you to M1. That's it. And all right, so that is the question. How do we plot the magic keys automatically? So we have done this. Now US dollar CAD. Let's see. US dollar, stocks, Forex, US dollar CAD. There it is. Forex majors. There's CAD. So what I do is actually, let me do it initially to show you what I do. I go here to the magic keys, drag. First, I change the template to the template color that I already have, which is this. So I already have these color pattern that I like. And then I just add the magic keys, and the magic keys inputs are actually my magic keys setup config that I passed you. It's loaded now, and when I click OK, it loads the magic keys with my configuration. Then what I do, I right click, go to templates, and save templates as new London session magic keys template. Save. And I saved it. Now I'm going to close US dollar CAD and reopen it again. So we do this automatically now for its US dollar CAD. We have this disgusting chart again. Come here, new London session magic keys template. Boom, and it automatically loads my magic keys with my configuration. I just need to put it on M1. That's it. Right click, right click templates, save, and here. Right click, templates, save, right click, templates, save template. Then right click, load template, and it should appear here after you save it. All right. So this is important, and it's because then it take time for you to do this. And I think we're just missing this amazing US dollar CAD opportunity, completely amazing. Or maybe not. Look at that. The price might just be going to the FVG. The dollar should be coming down for it to go up, but the dollar is going up. So there's a divergence here. This is very good to see. So, all right, why is it coming up? I don't see any entry. Okay, I see there's an FVG, an FVG there. Let me see, but it's already broken. It didn't actually. Yeah, this seems to be going very bullish. Let's continue what we were doing. So we got CAD, now we got Euro CHF. Next chart. So this is something that it's advisable for you to do the previous day, you know, because it's just or before when you the first time that you yeah, before the market actually starts ranging on you and you want to do something about it. So the next one is GBP CHF. So as you can see, I just did 3 charts and the level of it was very fast. And GBP AUD. They are, of course. This only comes with practice and understanding what I suffered to realize this. Euro GBP. Euro GBP. And we load it again, right? So we have already 1, 2, 3, 4, 5, 6, 7 charts open, all ready to go with the magic key. And Euro US dollar is the next. I think we have it here already. Yeah, but we don't have the magic key, so we just load it. There we go. And EuroCAD, Forex, EuroCAD, templates, Euro AUD. Don't forget to move the time frame to M1. And that's the only thing. Euro AUD. Yeah, tell me. Yeah, and the last two, AUD CAD, new chart, AUD CAD. So we just opened 20 charts almost in less than 3 minutes, which is really decent compared to what I was doing previously, like 10 years ago. It was very different. Let's put it like that. Okay, now AUD New Zealand dollar. I don't know why. Yeah, but you want to keep the shards all open each time because each day you have different shards that for you are points of interest. So what you open is the points of interest that you already mapped. So then you can just enter. That, are you sure? All right. So then you can just do this. All right. And there you go. Got tiling. And if now we need to, we have it here already. Right? So let's scope this. Let's scope its default at 0.5%, which is perfect for me. So this account at the moment is at 170,000. So 5%, 1% will be 1.7 thousand, 5% 750 bucks. So that's pretty decent stuff. So what will appear regarding this? Minimize, and I like to minimize all of this shit until I need one because it takes resources from your computer to have them all up. All right, so I'll leave one up and like this just to make a point and to map the entries. All right, so let's see what's happening, right? Look at that. What did I tell you? It's going very weird up there. Look. Yep. Okay, so let's see the current situation with the Dixie because a lot of pairs that we have, they're using the Dixie. The Dixie looks like it did a pullback and seems to, if it breaks this low, there's a continuation for the trend. Also, we need to understand that we would trade normally at 3 o'clock in the morning. That will be the actual kill zone. And if a trade doesn't appear, you would wait until 5 a.m. maximum. Yeah. Yes, we did trades before 3 o'clock from 1 until 5 a.m. is your window, target window to engage. What do we engage? Above and below scenarios that will appear until this area. And then we engage on them, targeting below and reversal, right? So this is the normal stuff that we know from the existing course and the strategy that we do. That's it. If it's 5 o'clock and you still don't have a trade with all these pairs, call it a day. There's something wrong, right? Normally there is at least one that will give you a really good opportunity. Clean chart opportunity. This is what I mean. And with clean chart opportunity, I mean it's not bad. I mean you have a cute FVG here. No, you got an FVG here that you can use to leverage your entry. So in here I would do just this. Put it on the top and target the bottom of the actual range, which is quite big. So it will probably give you a decent RR value. Let me just set this to test statistics things here. So it's a 6R, you know. Now, what do we have here? We have US dollar, Swiss franc. For it to go down, the US dollar needs to be going down too. Is the US dollar going down? It is. So this is the second confluence that you would do to validate this interest setup. And then you will have probably a waiting on the bot. The bot, no, the machine learning algorithm to give you actually the entry. So right now, let's do this. US dollar, Swiss franc. Where is it? Where is 25? US dollar, Swiss franc. I don't have it. US dollar, Swiss franc. Here it is. The fucker. We open trading view. We open trading view. We open the right. Change it. Boom. Bang. Range is that. Where is the range? It's really this area at 81,374. So 81,374 till there. That's the fucking range. entry, pending order. We zoom into the pending order right above the FVG. And we open. Boom. Done. And the pending order was just triggered. It just entered directly. It's within the FVG that we just scoped. See? It was perfect entry. The resolution on the ML is 87 percentile. So this was our entry. For me, beautiful entry. And now let's see if the price reverses. If it doesn't, it takes us out. It takes me 0.5% of all these pairs, which is shit. Okay, fuck. This I don't care anymore. So in here, break half of the actual thing, trigger it. All right, I'm done here. Want to know more about this shit. Next one is Euro GPI. We are already half of the chart. And the reason why this is very good is because you're still within premium level. And if you range, where are you? You're in the premium range. What does the price do? Price moves from premium to discount to seek the best price. So we always sell at premium and you always buy at discount. And this is very important. So entry one done. There we go, right? I was taking a tiny little notes somewhere on some chart. So I don't know where it is anymore. But okay, so this is a trade that we're gonna monitor later on. We have a similar US dollar, Canadian dollar here. We can also do this one. So for me, this is all very interesting. So we just go, what is it called? US dollar, Canadian dollar, bang. There we go. Open magic. 0.5%. Where is the keys? Where are the keys? Reverse. Hello, switch. Oh, it's some shit. Okay, let's see. Okay, this will be the top of the range that I'm interested in. The bottom of the range is at 385558. 38558. That will be my range. And it's already entered the FVG. Unfortunately, I don't think a pending order will. No, this needs to be a market order right now. Boom. Oh, I cannot believe it. It just closed. You need to count on it while executing. And this is why proficiency in execution is key. 38558. So 38558. It's around here. I just open a trade right now, 0.5%, and go. There we go. Second trade open. So what did we do? We just map it on TradingView. We map it. We entered here. The stop loss is there. Our take profit is there, and it's a 1 to 4. Euro CHF. How are we here? Looks like shit. Right? What do you think about this? Yeah, I'm not trading this. This is a bull scenario. No, this is a sell side imbalance with a buy side imbalance that is being supported, and it's gonna take the high next. The same here, buy side imbalance. If we put it on an M3, this is an FVG that was just respected there, and it took 50% of the FVG below, meaning that the price is gonna reach new highs. This is not what we want. I'm taking this out and these two out. This too, this is not for me. Now, this is interesting stuff, what's happening here. But for this to actually validate, I will have to wait until a market structure shift occurs, which is this top or this top, the low. So I won't enter here, but I will validate the entry here. Then the idea is that the market comes here, displacement candles at 3 o'clock, which is right now, and then it should start puzzling market structure in the bullish scenario. For me, this is not optimal. This is optimal, Euro US dollar. This is very beautiful. Oh man, look at the, oh, we have confirmation too. I'm entering Euro US dollar. So there we go, Euro US dollar. We open, map, pull back. Well, let's push that. Everyone will. That will not be the first time. The second will be 13976, 13976. We open, boom. And yeah, the settings are here. So this happens because the filling are FOK, which is fill or kill. And this is what it's referring to. Fill or kill, the order filling method. And what happens here is that sometimes you have a stop loss too close. If you plan on entering here and your profit is here, the amount of lots is insane. So if you give it a bit more space in the stop loss, it will fill. Try. Give it a bit more space in the stop loss. So this is a problem that he's referring to. I don't know if anyone can hear, but I'll portray what he's saying. I cannot fill, the order filling method is invalid, and the MT5 doesn't give me the validation of it. So this is what is currently happening there. All right. Does it work? Did it work, Phil? Good? Hmm. Okay. So next, EuroCAD. Beautiful EuroCAD here. So EuroCAD, here we go, EuroCAD, open. So if you don't plot this correctly directly like this, the chances that you will have time to do all this are crazy. 57950. Oh, this is already almost the whole range taken. 57950. Still probably can get a 1R, some shit like that. 1.6R. Yeah, just now. EuroCAD 2. Well, the 1R not optimal. That is what it is. This for me just took the top now. And looks very bullish to me. There is an FVG here on the 3 minutes. The FVG was below 50%, you know. So if you want to map an FVG on M1 from the M3, you can directly see this. So this is the FVG on M3. Now oh, this is the M3, shit. Okay, we're not on M1. So that will be on M1, how it will look. So this is very bullish to me at the moment until market structure shift occurs. And by market structure shift is M3. And the M3 should be taking this level or this level and routing down. And, you know, that will be kind of the scenario. So at the moment, this is not valid for me. And in here, it looks good, but I would like to see first a market structure shift happening here. Actually, from here. And then I'll consider the entry. And the New Zealand dollar looks amazing. And I don't have the symbol. Why? Why doesn't Vantage give me the symbol, man? What is going on? Wild charts. AUD. Come on, man, are you kidding me? So what I need to do is come to the standard toolbar, symbols, and in here, forex pairs. Let's see, it's not probably on the exotic AUD sorts, AUD, New Zealand dollar. No. Oh man, this is so bad from these people. Why don't we have New Zealand dollar? AUD, no, I don't have New Zealand dollar. AUD New Zealand dollar on the forex minus forex. I found it. There it is. Show symbol. Bang. File. Open new chart. Forex minus forex AUD New Zealand dollar. Bang. Template. Give me magic keys. Okay. We're on M1 chart. Open. Okay. How do we see it? We see it bullish as fuck. So we, you know, there. And we target 7606, 7609, so 7609. and probably give it a bit more slack until we have at least 3R is should be fine. I mean, fuck, it's 3R. We can put it closer, but you know, yeah, there's more risk associated with that. Um, so yeah, we open the thread. Now we see which ones we opened, tile, and all the others we can minimize. Bank. This is what we currently have, and I think the other ones are already, but they bounced down pretty much. And I think the same is going to happen with the Euro US dollar, the Euro CAD. Yeah, and the AUD New Zealand dollar too. Looks good. The Euro US dollar. Let's see what the Dixie is doing. All right, the Dixie is actually going into the FVG here. So then it fills the FVG to then come down. So the best entry part, I think, would be when it fills this FVG and you just target this shit down, unless it's going to use these two. And for that, I surely do not know. But this is the dollar index, so you know. So we'll be waiting that all the dollar index just created a very interesting thing, which is it tapped into here, you see. And this is the 15-minute chart. So it's really tapped into, like this, because this is really annoying. It really tapped into here. 50% of the FVG started moving bullish. Because of this is a bull range on the M15, which means that all the dollar pairs should come down. so the so the Euro US dollar, when we scope the reversal towards the range, it does not correlate with what the Dixie is doing now. I would not enter this shit. But I did, and I'm stopped now. Like I would not enter it if I would. So the second step to actually then correlate this would be correlation with the Dixie or the JPY. Correlates the trades. So the trade bias, bull or bear, related to the step one with Dixie or JPY basket indexes, right? And if all goes well, and the fifth is check M1 setup, confirms the above setup. Enter the trade. Enter the trades. 7, break even 1.2, R 8, exits on the end of the Asian range. There's the procedure. Simple thing, very simple thing. And the thing is not, it's actually being consistent with this every day. So I mean, of course, it's simple, but I mean, the people, the people that actually can be consistent with this every day is unbelievable. Slow, low, unbelievably low. So what we have, the only one that seems to be working is AUD New Zealand dollar. At the moment, it's 320. the correlations are not there. So if we go back, what is currently happening? The step 4, the correlation of the trade with the bias, with the trend bias that we currently have, is not working. It's not being confirmed. We don't have this confirmation. We have the confirmation on the Australian dollar using the dollar here, but on euro US dollar, for example, it's completely backwards until we see the Dixie. The Dixie is finds support on this imbalance on the M15, and it starts pulling up. On the M15, do we have an FVG here? We have an FVG here. See? So there's a good chance that the dollar is actually correcting this FVG for them to come down. For that to happen, it needs to respect the FVG, which it didn't. So there you go. The next 15 minutes, no, man, no, it does not. It does not. So in here, we can actually pick this one and wait for better times on the euros US dollar, because the market structure invalidates what we're trying to do, which is counter the trend to this side. I mean, it's just not happening. And since yesterday, it's in a bull run. It's simple. This is yesterday at 3 o'clock New York time. So it started a bull run at this time. And there's a good chance that it's going to reach here on London, and then on New York completely flushes all the shit down to the toilet. See? Because it's preserving the top of the pullback, reaching for the FVG point of interest, and then there comes down. So for that, we can also be aware that we can map an area, create an alert with this area, which is this. If you just do this, add an alert, and then just say POI, point of interest, M15, and you will be alerted when the price reaches this area, which makes you very aware that you're in the initial morning area that you define as the POI. And this is the alert right here. So the alerts will appear here. And this, I recommend doing this for the Dixie, because when you have an alert for the Dixie, it impacts all the US dollar related pairs. In this case, negatively, in the case of GBP US dollar, US dollar, because they're negatively correlated, because the pair has the actual US dollar. But for the ones that are positively correlated, this means that it's going to be doing exactly the same as the Dixie. So that's pretty much it. This is a beautiful entry here, man. Look at that. But bullish. Yeah. So for me, the model that we currently have, the range, Asian range, is not working. No, it's not working. There's days that's gonna work, there's days that's not gonna work. It's just how it is. There's no miracle. Hmm. No, we want consolidating it. Otherwise, this is trending. Look, exactly. You see, this is the problem. So because of the way that the Asian range was, it's not consolidating. So the market is not consolidation. Consolidation is like this, right? And because of that, the market behaves in a different way, or the expectation of the range is different. So when we have a market like this, which is trending, which is, following a trend, there is a higher probability that this market type creates a continuation of the trend, meaning the reversal that is expected to happen, it's not going to happen on Asian ranges that are like this. This is, we talked about this on the previous video, I think. Yeah, this is all about probabilities and the probability of that happening is not there. But we have a nice spike here. Just say, let's see what's happening here. Dollar would need to completely reverse. You see what it did? Seems to have corrected this FVG here on the M15 that we were talking about. This guy here. And it should not come down because there's nothing for it to come down for here. But the price moves from internal liquidity to external liquidity. So my bias is still bullish for this shit. So Dixie is gonna come down. I'm expecting this shit to go up. And yeah, split it the top of the actual range there and up, and there we go. 1,000. Okay, we have 1 to 3. All right. So the only one that you currently have open is AUD New Zealand dollar, or the remaining ones are completely blown to shit because of the way that the dollar behaves, which is very nice to see. So I'm going to enter once to see if it actually, this stop is broken, which means that this stop should be broken. And if that happens, we have a continuation to this area, and I already entered. So yeah, that because what I normally see is that okay, the market reaches this top and then it starts throughout the day until New York end. Sometimes very slow. When there is no news, there's no volatility for the market to go very fast to the actual point. In days, there's days that we have this whole movement in 10 minutes, 5 minutes even, without, yeah. So this is why I entered now, just so you understand my logic. So there's logic, reasoning behind what I'm trying to do. What I'm trying to do is have this FVG targeted on the dollar index. For that to happen, the market needs to come down to this fucking FVG. Because of that, I entered the trade here and currently have it around this place, and my idea is to come to the end of the engine range. Notice that the engine range really links to the end of the FVG. So the imbalance will be corrected around, so which is very interesting to see. And that's the scenario. This is why. So if this comes down, I still stick with the same bias that I was having, with exception of this guy here. This looks very interesting entry point here. You see it's doing the 3 little Indians hopping. So, and if you don't know what the 3 little Indians are, 1, 2, 3 little Indians. There you go. All right. It's important to explain these things. So what we have there is an FVG, right? Let's put it a bit bigger so you can see the shit properly. FVG there, price above, there, bang, bang. Where's the range? The range. We have a 1 to 3? No, we have a 1 to 8. Perfect. We have a 0.5% risk, 0.5% risk. Open trade. All right. And the next is EuroCAS. I don't know about the EuroCAS. Let me see. Come to the FVG to really entry point, which is beautiful and gives us another opportunity here because it's just caring about us. You saw that we were upset. So Euro Canadian dollar is here. So we just there you go, Mr. Alien Canadian Alien Canadian. And what we need to is the price was rectified by this wick. We want the price to hit this top, I think. Let's see. Price is at 57948. 50 57948. Now I would recommend that we wait for the price to really sustain that this is a support level based on the FVG that we saw. So for that, it needs to hold. If it doesn't hold, I wouldn't enter. If it's breaking this low, I don't want to be on this logic, right? And if that is the case, means that the market was completely ranged, starts coming down, coming down, coming down, and doing, I don't know what is this actually, Euro Canadian thing. I have a 61 percentile on the ML-LC, which is not good, but it spiked, came down, give us the, I am here, I was here, I'm gonna give you, all right, give us the fucking entry and fuck off. And there you go. Yeah, yeah. So it's really okay. In the meantime, we have the Euclides New Zealand dollar. I finally found this fucking asset in Vantage, man. It's kind of nice to actually have. And no, Australian dollar, New Zealand dollar. I was, yeah, that was a joke. And yeah, that's kind of the scenario, right? See, Cardano is a crypto asset. It's a crypto asset. Cardano. Yeah. So we currently have 4 trades running, pretty much. Let's see the traumatizing history of our beginning, which is going to be completely matched. Toolbar. It wasn't that bad. So this is the existing scenario, what we currently have, right? And oh, look at that. Beautiful. It would be nicer if it would break this area. It would be great if it break even there. Okay, there you go. This also looks great. The US dollar CAD means that the dollar is coming exactly down. This comes down, this goes up, Euro CAD goes up. This should, I don't know, because this is an Australian pair. I don't know about this. I don't have an index to compare this shit. It's amazing. But look at this. We have 1,000 bucks in the bank. Let's see how much we lost. 20,000. Look at that. So these are my testings from the bot yesterday. Really bad, but let's scope what currently really matters, which is our entries here and our risk management. Our risk management before and today was these 4 trades. 1, 2, 3, 4. They're completely out, right? No, well, yes, exactly. So it's 0. It's 800 because I have 171,000, which corresponds to 1%. So 1% is exactly. So this is the story. But I hope that right now we have 2,500 in the bag and counting to be much better, right? Break even in half. In here, the EuroCAD is completely going wild. We guy at half right here, and the US dollar is doing so good too. Look at that. Very proud of the Euro US dollar finally. So there's a good probability that beginning trade doesn't go well. The second trade entry goes better. You know, very important. Now that's the scenario. Now we just monitor what we currently did, right? And that's the process. How about that? How about that? There you go, right there. Yeah. It's important, right? It's important, of course. I don't don't take early profits. I'll let it, or no, I don't, because it's impacting the mathematics behind the actual RR model long term. I don't want to take profits early. I want to lose or I want to win. That's it. If I don't lose at a 1 to 3 because my strategy doesn't allow me, I change to 1 to 2. I change to 1 to 1, knowing the correlation of trifactor, which is the win ratio versus risk reward versus the frequency of trading. And only when you have a probability statistically sustained based on your backtesting of a win ratio associated with the strategy on a given R, you are able to validate that long term. Until then, don't change nothing. By changing just one variable, all what you have that is sustained is going to get fucked. So no, don't take partials in the middle. It will fuck you up. No, you don't. You don't let it come back for that. No, you just kill it directly there. Yeah, of course. This is why you should then analyze market structure within the trend. Right now, you should pick up. You have a euro. In this case, I did 4 trades. I should not do this. I should only do 1 trade per time, per session, and maximize that trade. And for that, now euro US dollar, we would come to the euro US dollar, and we will. What we will do is actually go into the M1 and understand market structure from here. And look at that. We need additional confirmations on that. So let's see what currently happens on M1. So we currently have an FVG here. And actually on M3 is better because we will have one only, but we will only have this. On M1, we have this guy here. So you see, I would wait for this to be taken, and I would even enter a different position of it, like this. We have a confirmation from our creature here, ML-LC, that this is a valid entry here, because the structure, look at the structure, is bullish. We will validate the structure, and this is the important thing of doing on every trade that you are, is validating the trend market structure. The market structure is broken, exit. And that's it. It's very simple shit. There, boom. What we target from here. This is a beautiful trade. This still gives you a massive, brutal fucking R opportunity at 7R. This is a beautiful trade, actually. Well, I mean, sometimes you don't need to be right at the spot. You wait like fashionably late for it. Very important. And hope our friends at SMB Capital enjoy. And you know, entry point below 50% of the range of the FEG range supports the actually to break even, and you enter and see the results and see what happens. You know, so that's the scenario. Let's see what's happening here. It's doing the same, of course, right? Because we're all on M1 on every single chart. And that's it. So in here, US dollar CAD, I would completely put it manually on break even. Um, in here, I would not wait for it to come more down than this. Also break even there. In Australian dollar, New Zealand dollar, I see that it came down. Let's evaluate what is happening here. Oh man, that was amazing. Look at that. Jesus, that was so cute. Look. Oh, right on the fucking FVG, man. Completely annihilated the FVG and reversed. Bam! So what does this mean? What we currently have here? We probably have a structure which currently supports a bear trend. So higher high, lower high, lower low, lower high, and if this is a lower high, this is going to be the lower low, and this is the range that it's going to try to reach and break out from to achieve a new lower low. See? So lower high, lower low, lower high, lower low, lower high, and the lower low will come down, meaning that if you would enter from here, targeting this area would be very beneficial, I think, at this point in time, if you see it like from this, instead of looking at the square and go from there. But still, if it is to reverse, it could easily come from here, reach out this POI and bounce from here up. So can do this and then target this area, or the other way around, like this area, option 2. So let's see what the market will tell us. In the meantime, let's look at our pairs. Look at that, crazy, 3,700 bucks in the bag. 3,600. Very nice. Yeah, no, nothing new. So because of that, I'll take 5 minutes and go for a smoke. And I leave this running here, procedure on the side, and like this, I think it's nice to see. All right, guys, I'll be right back. I'll be right back. All right, how do I pause this? Guys, hello, creatures from hell. Are you here, creatures from hell? I'm making a tiny coffee, man. I'm making a tiny coffee. Oh, okay. Look at the dollar, man. It's completely going exactly as we mapped it out. Look at that beautiful fucking trend. Completely sliding our way. We were in the trend since there. So this is what we expect it to do. It's entering the actual M15 minutes FVG. So there's a good possibility that now it will bounce back up to do what? To take this FVG here. And then reaches there. So internal market structure to come back down. Let's see. So we expect a reversal. We want to see this happening here, right there. Bang. And if this gives us a pullback, you know what we're going to do? We are going to enter a new trade on top of this trade. It's already on break even. And we put the stop loss below the pullback. But if it pulls back now, this should be considered a solid low. But it's not going to be. That's not going to be taken. We have a 3,000 3R trade here, man. I don't see. I need to put this somewhere else. Here. Oh, it's breaking out. Look at that. It's breaking out because of this, of the Dixie. You see? Because the dollar is breaking out too. You see? Market structure shift here. MSS on the M1. This is considered okay. I wanted to see it coming down to this area. This is a very interesting area. And let's map this area regarding volatility. Okay, there's the VAL that we just passed. This is the volume low level. POC is right on the FVG. You see the POC here? It's amazing POC. And this is great because this sustains exactly what we're doing. And I love to see this. I mean, now it's too much lipstick, like our good friend Michael says, there's a lot of lipstick in the chart, man. It's too much lipstick. Yeah, but you know, no, true. It helps. It helps. We just profile the volume very fast and have an understanding of it. That's kind of the scenario. So as expected, I think this is going to go back to the control point of the volume profile that we just saw. So the control point is here. Let me create a thicker control point so we can see the POC in a thick way and understand what there's the control point. Let's see what the market does, what the price does, if it goes back to the POC or not. And I'll even put it here. This is volume profile. This is the fixed range volume profile. You can, so okay, for who doesn't know where the volume profile is, shit, you guys can come to the toolbox here, and there should be fixed range volume profile. And you click the tiny little symbol here to add it or disable it from your toolbox, as you can see there. And there you go. If you know, you wouldn't be asking. That's it. But people that might be seeing this because we're streaming live might not know. Right? I think everyone can hear you, man. Yeah, you're streaming for the whole world, man. You didn't know. Yeah, there you go. All right. So we don't want to break this tiny little pullback here because this will be the next level of support. No, I'm kidding. No one is hearing you. It's okay. Chill. All right. There is one that just got tapped out, which was the Euro CAD. Let's trade history here. You see, euro dollar Canadian dollar just stepped out. So bearish, bearish. I don't know what's happening there. All right, no issue. Let's eliminate that from the equation and we have these three. So what we want to see is the volume profile here. Yes, here. So now it's disabled. So we bring the magic keys, open, break even, and you trigger it. Active trigger. That's it. But I'm already in break even. But let's, for the test, let's suppose that my stop loss is here, right? And I passed 3K on this trade. That's great, actually. Um, I kind of need it because the history, it's damaging, man. One, two, three, four, it's all fucked up. Yeah, it's got five trades that are completely fucking damaged. And I guess so. So notice what I did. I moved my stop loss to the previous, okay? And this for me, right here, is a very interesting point here. So what I would be doing right now is I would be entering right here. But since I don't have the limit order possibility, I'll just enter it there. I entered the second trade right now on your US dollar. I hope you saw it and why I entered the trade. Don't worry, I see it, I see it, I see it. All good, all good. I hope it's okay. Is it okay? Yeah? All right. So uh, I hope you saw why I entered the Euro US dollar here because it created the pullback. We reached the POC of the volume profile. So let's do it again for the ones that didn't saw. Right? So volume profile. There, I think, something like this. And reached the volume profile where we actually signed it and like this. You see? The price came exactly there, and let's zoom in so people don't see well, see it fucking properly. The price came into the POC of the volume profile and completely fucking collapsed. Because of that, I opened my second fucking bull pullback trade on top of the existing one. It's almost reaching break even here. In here, you asked me how do we actually break even, and this is how we break even. Look at that. Oh fuck, it almost reached break even, right? So um, we have two options: or we move it manually, or we don't. We currently have 4,500 bucks on the table with these trades. We on the New Zealand, we are almost tapped out too. Look at that. Very, very bad. Very, very bad trade. Yeah. Let's see if this is really a nice support level that supports that the price needs to go up, but it's so bearish. I don't know the market structure of AUD New Zealand dollar. I should have seen it before. I didn't saw it. So we currently have euro dollar doing wonders, the CAD US dollar doing wonders, and the rest giving the shit. Let's see if we can pull it more. Look at that. The dollar is still puzzling out. And if the dollar continues correctly, the US dollar CAD continues negatively corrected towards what we want to achieve. We move it a bit lower, maybe like this. Let's see what currently the Dixie is doing. So very close. I'm blind. There we go. So let's clean all this clutter. Ah, perfect. Now, so yeah, where did we enter? We entered here. Why? Because we tapped above the range that we marked as Asian range, and then we saw that the price came up to an FVG, a point of interest, and started reversing from there. And this is where we entered and the reason why we entered. We did not just enter blindly to this. This is the reason why. This is the move that we expect is a 1 to 8. So if we pull the actual POC, standard deviation tools, we see that we're in a 3.5 R right now. Now, important to understand is what is the market structure doing and what is it trying to achieve? Are we in a bullish or a bearish trend on the M15 or on the Dixie? Oh my God, it looks beautiful. Because the Dixie shows clearly a bearish trend, and this might just be a pullback to take down the next level low. What does this mean? That if it's going to take the next level low, this is the breakout that one would be expecting to be reached, meaning that our take profit can be here, which is a 1 to 14. Oh, but it's too much. Okay. So don't enter, don't let it, don't enter, don't do these maths. Look at the chart and look at your indicator RSI and then judge. Yeah, the RSI is telling me that, no, look at the RSI. Fuck off your fucking RSI. Don't look at price action. No, it's not needed. Stockaholic. There's the stockaholic. It's an alcoholic indicator. I call it the stockaholic. It's a fucking alcoholic indicator for alcoholics. My crack D. I will consider this AUD New Zealand dollar to be doomed. I'm going to exit the trade. And I exit trade. I don't provide any sort of trust regarding that trade. I don't want that trade. I'm like, done. One less shit. Yeah, we close it. It's okay. We close it. And that's the scenario. I mean, this is the current setup that we currently have. We're expecting the dollar to come down to these levels. Let's check out the volume profile for this whole range. Oh man, for this whole range, the point of control is just there. It's completely unfucking believable. Oh, motherfuckers with the stockaholic fucking assumptions that they're that's coincidence, man. Yeah, right. Actually, the price started to reverse brutally from here because it's coincidentally too. Yeah, we don't have I don't know 10 years of experience on this shit. We didn't saw this before. No. So it's okay if we currently have the whole day has a loss day. If we have some profits right now, it's also okay. And the situation is this. So this seems to be very favorable situation because it's an interesting trend on the dollar, which supports that other markets will also be doing this too. And one example would be the beautiful Swiss franc that just gave us a massive fucking entry there. Look at that brick structure, FVGs all over the place so you can enter. So this is the fucking entry point that I'm looking for. So US dollar Swiss franc. Let's look at it. Where is my magic keys? The magic keys are all magic keys. Boom. Dang, boom, pow. We are on on this guy, so we want to see this FPG being taken here. Maximum, and it's just top, the top, 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 top. And what do we want to do? We want to see it reaching here, which is the simple 1 to 13. Yep, there you go. I want to see the market reversing and breaking this low. Right. Do 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 do. Excuse me. And volume profile. POC. Look at where it is. Beautiful. So when you say, yeah, well, I don't see the POC, well, shoot yourself, man. Don't trade. Go and see the zoo animals or some shit. This is not for you. You know, fuck. If you don't get this, don't trade, man. You're playing with this shit. Better stop. Look at what you're doing. Learn new things. You know, why do eagles fuck around? Shit like that. By the way, this video is powered by Bang Bros. We're supported by. Who's laughing knows exactly what I don't need to explain more. So there we go. So we want to see the FPG not being respected. When it's not respected, we will use this pullback to enter the fucking trade because it's going to go according to the Dixie. The Dixie is coming down. Since the dollar is a base, not the quote, we expect it to come down too. We are already here. Look at that. It looks fantastic. There we fucking go, motherfuckers. Oh, but I don't understand. Buy a fucking dog. Fuck off. That's you can really trim it here like this to the top of this candle. If it breaks out, targeting, well, I don't know, but the previous Asian high low looks pretty promising to me. Like this, it's a 126, so we come back here, we shove it there. We expect the price to come back to fill this tiny FVG here, like here, and then this is where we're fucking entering. So 1 to 18 already, and we go, and we wait for the price to fill the FVG. Boom! And it's exactly what I mean. Are you kidding? This is the pair that we're doing now. All right, so standard deviation tools in the process. Okay, we got volume profile added in. POC control point. We don't see a POC. What? Oh, there it is. Very, very slow. Why is there a POC? A look at the POC, how it relates so well with the freaking FEG that was just given for us to enter from up there. Unfortunately, I missed that one. And I think I'm going to miss this one too. It's, let's see what's happening here. It was very close, man. I don't know how many pips this entry is. Yeah, I don't have the tools. Let's see. It is what it is, I think. We can also move it to the previous high. It should be fine. I mean, for fuck's sake, it should not take that high. Or if it takes that high, it's going to reach to these FVG levels, and then we would actually be able to enter from there. But these are equal lows. This is also something really important to understand. And when there's equal lows, there's a great probability that this is a massive support point, and the price is going to bounce up. To understand that, we can actually use the volume profile at these points. So there you go. And this is indeed the VHD. So volume average, the VAL. I think VAL. I'm getting old. Yeah, it is the VAL. This is the VAL. You see, VAL is the volume average low. Maximum volume average low. If it breaks the volume average low, it's gonna go shooting because it breaks the support. The support creates a resistance, and I mean, you know the story. I think you saw this so many times. Breaks the low, support becomes a resistance, and let's see what happens. Currently, we are like this. It's still a 1 to 3. It's pretty freaking decent, I think. In the meantime, let's see the other pairs. What are they doing? The creatures from hell. And US dollar Swiss franc bounced up. We have a retracement on US dollar CAD. Maybe it's going to reach this FPG here. It almost reached our break-even point, but I mean, we are on manual break-even, so it's just okay. We have two trades on Euro US dollar. We would like really to see the dollar coming down, and we see it starting doing doing a tiny little reversal there. And the reason for that is that it's going to try to absorb this FVG that we, oh my God, this is really bad. Like this, and the 3-minute FVG, it's already kind of done. We would like to see is this blow being taken here like this. That will be really pleasant. And 30 seconds I don't have, unfortunately, but I like to trade on 30-second, 15-second move. That's really, really cool stuff. But I don't think it's for everyone. Like Al Brooks says, if you take more than 2 seconds to choose the bread in the supermarket, don't scalp. Stick to day trading. It's the best thing for you. So in here we have one FVG and another one from here. This. So these are M1s and M1s, and there's a good probability that the dollar goes here to come back down. It doesn't take, I hope, the volume control point, but I'm expecting it to reach this level, come somewhere around here, or even here, and then does this. So this is my assumption. So if this is the case, what do I need to have in consideration here? That these FVGs on the Euro US dollar might be entered, so I might need to protect a bit more my stop loss until this pullback is done. That's it. The same is applicable for this pair that we currently have here and US dollar too. Right? So that's the kind of scenario that we currently are experiencing. Yeah. Mhm. We can, of course, we can. Um, we we currently have a trade that is from here, and I don't think the price it might really go down there. Let's see US dollar index. What is it doing? We have the dollar index here. We can stream this like this and put it a bit like this too here, so we can see this shit better. Like that. If it comes higher, the US dollar Swiss franc has a great possibility that it's going to target these levels here. So yeah, I'll just move it here, but this is the maximum that I'll go, that I'll be willing to risk regarding this trade. If it passes this, means that the whole ideology is broken, and I don't know, I would need to look back at what was done and what wasn't done and understand that. And that's kind of the scenario. So the only one that currently is exactly out of reach is actually USD CHF. All the remaining ones are still within the actual, but it's a pullback until to these levels. So I think it looks good. And now you see the price very slowly coming down. Uh, and I mean, normally the price moves in a LR, LR, and there is a HR, HR. And what is this? Sometimes we don't know what that is. So let me explain. This is the price when there is a lot of no volume, or there is not a lot of buyers moving. You know, it moves in tiny little pieces, and then it reaches a point, and then there's a candle that takes the whole fucking shit out. All right, so this is the LR of the trend. This is the low resistance point of the trend. You don't want to go on a bullish trend that has a LR. You want to go on a bearish trend that has an HR, which is a very fast resolve trend. So normally the bullish in this case creates liquidity underneath here. So then there is a massive fucking pullback and liquidity is taken to then support even the move continuation going on. And I've seen this time and time again. So same, slowly, 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 bang, fuck, what happened, right? So this is LR, this is HR. High resistance, low resistance. Sorry, low resistance, high resistance. This creates a lot of resistance to come down to reach this point, and then there is low resistance for it to go up, creating a massive candle, a spike like this. This is LR, and now I'm expecting it to reach the FEG point, actually here, not passing 50%, and then boom, in this way, because it's a bearish trend. It has more resistance to go bullish. It has less resistance to go bearish. When there is less resistance, when there is resistance to go bullish, the market tends to go very slowly, and then it reaches a point of interest. Boom, less resistance. And what happened? I don't know. I don't know. Oh my God, I fuck. Look at the market structure on the 15 minutes. Understand what the market is trying to do. And from there, you will understand what will be the point of less resistance. You know, like this is a good example here. Resistance, 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 which is a boom, 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 and all fucked up. And there's more. I mean, of course, resistance, more resistance, more resistance. Really? Bah! Not the best examples actually here, but this is cool. Resistance, 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 very low resistance. So obviously, yeah, exactly, exactly. Uh, so yeah, well, this is 15 minutes. Very interesting graphs. So let's see where we are here on the M1. Let's clean all this a bit because it's a bit choppy to look at this like this. It's very choppy. Oh, Jesus, it's huge. What have I done here? Okay, so here we go. This goes here too. There we go. Up. What was that pair that we were on? Here. There we go. So yeah, this is Dixie. Let's see the damage here. Has expected reached the FEG, created engulfing candle after reaching the FEG right point, and it's the path of resistance and no resistance. And I would be expecting, if I would be seeing a continuation of the trend, that there is a massive displacement candle staking this high right here really fast. The same here, resistance, 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 and now bang, completely selling, and the same here. So let's see what happens. I'm very curious, and let's zoom into this a bit better so we can perceive this in a better way. What I was referring to regarding LRs and HRs. It's interesting, right, how the price moves. It's so unpredictable. Yeah, we don't know what is doing. Yeah, we don't know. Yeah, there we go. Look, there's a POC here right now. Is it? Point of control right here. Really good chance of it reversed. Let's pick up the whole trend so we can analyze this better. All right, for the whole trend, it's still there. So even if it reverses, where it went, oh wow, I didn't notice, but look at what I did. I was expecting it to reach this. I don't know if you see it. Oops, I'm a little shit, sorry. I said that the price is gonna reach this level a few minutes ago, and it's not gonna pass 50% of the FEG, and then bounce down. Look at what happened. This is the 2 or 1 pip of the FEG spike that we normally see. That's kind of it, I think. So now it reached a new point of control. Let me see. This is very interesting here. And that's it. You see? Point of control here. We want to see it break this point of control and doing the continuation. And For that, we want to see this being taken out. Strong pull, big fucking candles like this, bang, like bam, completely broken out, and that's the scenario. I mean, yo, well, yo, there we go. Yeah, the correlation of the index with all the pairs is one of the most important things. If you don't consider it, there's some room for improvement there. There. Hope it makes sense. And let's see what happens. This is the Dixie, what we currently have right now. And now what we need to do is wait. So there is still a continuation. The markets seem to be going up to this level here. This guy here, the US dollar CAD, might be looking for this FPG, but the dollar CAD is linked to the Canadian dollar index too, and I'm not mapping the Canadian dollar index. There is always a way between, for example, if you have a pair US dollar JPY, there is always a weight balance between which one is the most, at this point in time, the most one that has more weight and more value and more probability. And this is measured by several different factors. One of the factors is the time, because if you have US dollar and JPY, and you know that you're in the London session, you're still in the Asian session. There's still a market running in Asia. And the JPY has a lot more impact than the US dollar does until New York opens. When New York opens, the dollar will weigh more compared to the yen. So when you see these two pairs, it's always important to map what kind of session are you in. Which session are you in? I mean, the Asian session, Australian session, my sister's session, and let's just go from there. Yeah, powered by Bang, bro. Yeah. So yeah, I'm gonna have a smoky, but you will hear me what the guys want. There's Michael, 230 people on YouTube, and great. Yeah, you know what? Yeah. So maybe yeah, that's the scenario. So what do you think is gonna? Some interesting things happening and correlation and support. More refined. The granular definition of things is based on testing and immunization. Taking time because there's no way that you can learn this by not exposing yourself to them. Understand these things. Yes, man, this is all about that. So I'll be closing this session at 11, which is in 45 minutes. It's in what? 40, well, yeah. And that's pretty much concludes the main session. Yeah, no, I just did 3 times today. Yes, yes, I did 3 times today. Yes. Don't worry, it's recorded. It's recorded. The video will be uploaded today. No, you've got the pending order button below that on the right side of the switch, if I recall correctly, because I'm not familiar with the computer. And if you click that button, it will change from market order to pending order, and you will see a yellow bar horizontal. That is the pending order level. Then you just move the pending order level, the yellow bar, up and down to where you think it's going to trigger, and maintain the stop loss and the take profit where you want. And that is insane accurate, man. It is right. It's completely worth 20 bucks or 30 bucks or whatever the fuck it is. Forget it, man. Forget it. Without that, it's not going to work very well. It's a nightmare with that. It's a nightmare because you need to calculate loss, calculate risk, calculate my ass. Just waste time, and then the market goes, I flew from, sorry. It is exactly that. understand London better, you know. And if you understand London better, then you will even understand New York better. So we're back, creatures from hell and space beyond, the who the fuck knows. Should we put another entry here? This is a beautiful. Oh no, that's already one there. Okay, so we have a possibility that um, the trade will go here. So this is M1, but I'm really keen on seeing the dollar now completely blowing that shit to the core. What do you mean with that? Well, we're going down. There, volume profile. That's beautiful, man. Yeah, there you go. There's just three here. Yeah, this is 93. They take the 93, coming down, boom, taking the liquidity. This is going to be a very fast pullback based on the volume profile. So there you guys go. Look at that. Look at what's happening. Dixie coming down and our trades going up. This is all going according to what we expected. Yeah, let's. No, I want to see it break out really fast, even faster than this. It's taking too much time. There's no volatility in the market because there's no news to achieve. So, well, it is good and it's not good. Um, we have 4 hour on one, 3,000 on one, and 4,000 on another one. So this position gives us around 10,000. It's a long position. It takes effect. It takes a bit of time. But that's the scenario. I mean, that's the idea. So FEG here, FEG being 50% supported by the wick means that really good possibility of continuation. If it breaks this part here, I would start second guessing this whole shit that we're just doing. I'm going to move my stop losses to a different level because this just shows that that's the scenario that we seem to be experiencing. There too, and here too. So we currently have a lock. We have locked 1,000 here, to 400 and something here. Okay, I'm okay with that. and and that's the scenario. Uh, Doubts, questions? I don't know. You were telling me that the magic keys, blah. Here, it's here on the pullback. Yes, it's pretty much here on the Dixie. I think it's gonna hit this FVG here. So reach back to this level here. I think we price this imbalance, and then from then it's gonna take this level. So, and this is market structure on the M1 for all of you. Look at what happens. The market took the FVG, didn't reach 50% of more than 50%. It's already market shifted below the previous one, meaning that in here we have a propulsion block that we talked the other day. What is a propulsion block? Do you know what a propulsion block is, or did you forget it? All right, so let's show an image of a propulsion block from Uncle Michael Hudson. Propulsion Blocks 101 lecture 2024-2016 core modules. Propulsion blocks. So let's see where I have the propulsion blocks where we talked about this. I think it was 2 days ago. I think propulsion blocks. What is a propulsion block? So this goes with thanks to Mr. Hudson, of course. ICT Monthly Mentorship 2016 core module. Propulsion block. So this here is a propulsion block. This here is a propulsion block. And these are all propulsion blocks here. bullish propulsion block is a candle or bar that has previously traded down into a down candle or bullish order block, which is exactly this. This is a bullish order block and takes over the role of principal support for a higher price movement, right? So let's give examples. Propulsion block, order block, boom, there you go. Propulsion block being supporting of the price. Next example for the masses that know of what the fuck I'm talking about, bearish order block, propulsion block. Propulsion block normally you will see creating an engulfing candle time and time again. Not on M1, if you change it from M1 to M3, you will see better in here. But I like to see things on lower time frames. It gives me the accuracy of seeing the price really hitting the FVG, rebalancing the price, moving back up as fucking expected. And there goes propulsion blocks for you. You can find this on ICT core mentorship modules from 2016 mentorship core modules. If you guys are interested in knowing more about this shit. And we have a new higher high, almost there on internal market structure, lower time frame. And look at that, we have market structure shift on the Dixie. We broke it. Can you hear me, man? There's always a problem with the fucking communications, man. I don't know why. We're, yeah. It's good, no? So what we have is breakout of the trend on the Dixie as expected. Exactly as the price suggested, refilling of the fair value gap price imbalance and completely annihilating the previous lower higher low. So higher low, higher high, lower high, lower low, higher low, and break it completely to shit. And now we're gonna see something incredible happening here. I hope. So this is a point that we actually have equal lows. This is something to also observe very carefully here. Yeah, and volume profile the equal lows. Okay, we still have the control point exactly where we mapped it. And I want to see this being taken out and enter this massive FVG that we have down here. And there you go. How cool is that? Advanced market structure for beginners. Look at that. Look at that. So how much do we have now here? 6,600? Oh, look at that. Oh yeah, this one is about to hit break even. So I should be receiving a pop-up here stating that you reach break even and the price. Look, are you seeing the chart? This is important now. You're asking me how this works. Look, it's about to hit break even. So let's wait for it. Oh man, it's one below 1 pip of hitting break even. And I received it here. Break even hit on euro US dollar. As you see, the stop loss moved to break even. Now I recommend you give it a bit more slack so you account for the commissions on the actual. You can also go here and based on your broker, you need to know what the round lot is, and in this case you will have commission one way per lot. So if you, for example, in Vantage they charge me $6 per lot round trip, one way per lot will be 3.0. What this does is when break even is hit, it calculates the cost and automatically puts it considering the cost of the lots that were used for the position, in this case 13.18. So it will be something like 13.18 multiplied by 6 lots, 79. So it will automatically calculate this to 79 bucks and prevent that. I like it manually. I like it manually. Yeah. I like to monitor market structure manually like this on the lower time frame after I get in and to see exactly what it's trying to do and to see if it's according to the narrative that we initially scoped. After, in this case, the Asian high was taken on the Dixie. So one of the most important pairs to observe would be in the morning would be the Dixie, and to understand if the Dixie took the Asian high or the Asian low, because all the remaining pairs that you will be fucking around with will be based on the Dixie or the JPY basket if you have a Japanese yen pair. And talking about the Japanese yen, oh my god, look at this entry on the ML-LC. Look at this. Oh, nasty motherfucker. This neural network, kernel neural network that we created is completely ridiculous. Shit. All right. It doesn't, I get shocked with this shit. Look at that. We have 6,700 in the bag. And I think we can go a bit lower. I think when we reach this level here, which is the FVG on the Dixie, right on the 3 minutes, we see it better. Right here, um, I'll start being concerned that it will just come in here to go back up, right? Doesn't this concern you? Because you know the way that the price moves, and you know the way that. How do we know this? And this is the question. How do we know if the FVG is going to be taken or not? How would you approach this? And this is a question that I leave on the table right now, because this is the basics for every fucking thing that we do. How do we know what will be the most probable uh, thing that the price will be doing? So let's go. And we have another propulsion block. Do you see the propulsion block being generated? We have a massive candle displacement in the bullish way. We have the correction of the FVG, and then for it to be a propulsion block, we would have to see this going even further up, and then that will be a propulsion block. In this case, it's going to take this FVG here, right here, and this is actually another trade that I can jump into with the. You were asking about the orders, FVG below, bang, new high, open, and the pending order was just executed. You saw that? How fast it was? There we go. Because I'm keen on seeing the support of the FVG here not reaching to these levels. Okay, so let's see what happens now. And if I am correct, the price will reverse and breaks this top, but there's a lot of momentum in this bearish trend now. If it breaks it, it breaks it. If it doesn't break it, it doesn't break it. It's okay. Still, since I'm already in break even on the other two, I can compound it and actually do a 2R. But this is normally how I would enter a fucking limit order. Put the pending order here. I hope you got it. Put the pending order right here and just flushing it down. At the same time, US Canadian dollar is getting very close to this guy here, so I'll put it to give space so this FVG is actually hit, and this is actually the previous strong swing low. So in a great world, I would put the stop order would still be there, because I would know that the trade, the probabilities of the trade in a bearish trend, in an M15 trend, which is what we're having here, to reach these levels, the top of this level is very low. So I will be really keen on seeing it reaching a bitsy high and then breaking down this level, because that's what it should be doing. Let's see what happens. Um, hmm, we can't on Forex because it's a decentralized market. We cannot fingerprint the FEG. On actually, I'm wrong. I am giving you the wrong information. If you come here and you pick up a pair from the futures called 6C, 6-1 Euro futures, which is 6E from CME, you can fingerprint the Dixie, the Euro. You will be able to fingerprint it. And this allows you to fingerprint the FEG within a future map, but you will need to have level 3 DOM access. You can also use a heat map. Correct, 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 correct. But look at what the futures is doing. Exactly the same way as sculpted. This is the Asian law. Very structured, very trying to reach the Asian high here. Right. Very nice, very nice. So this is the Dixie effects. Um, the Dixie, the Euro US dollar futures. So you will be able to perceive it from there. It will be the only way that I think that you can do it on Forex. If you want to do that properly, do it on indexes, stocks, because you will able to access icebergs in order to tree order flow, fingerprinting level data. In Forex, we're all doomed with these motherfuckers actually. So but it's fun because if you go with the existing market structure, you will find it interesting. Nevertheless, where were we? JPI baskets back in because I had reached my limit of, of shit that I can put on the watch list. So this is why I took it out. So what is the price doing? Oh, look, the Dixie is going up. We're fucked. So let's relax, breathe, don't be stupid too. And we got an FVG here. The price just fucking reached that FVG here. And it should take now this lower low. If it's engulfing candle, it is correct. Always the same shit. It's always the same shit. The price goes to the imbalance to reprice the price because it's an imbalance in the market. The price is incorrect at this values. There's a fair value gap. What is a fair value gap? Fuck, I don't know. What if I'll put it exactly as Michael says it. Imagine that you're painting a house wall and you're using a roll, those rolls full of ink, and you reach the you're very fast rolling because there's a lot of volume in the market, and the market to win place moves very fast. It's like you painting the wall. The analogy would be you painting the wall, and the rolling it very fast creates um, problems in the way that the paint is in the wall. It creates holes. Look at this. It's amazing, and it's the third trade. I mean, Euro US dollar. It's my third trade. It's my third position for Euro US dollar, man. I'm at 7,500 at this point in time. No, no, it's not. So going back to the roll, you're painting the wall. You do a fast move. The paint that you're doing with that fast move, it's not good. It has a lot of problems in the structure of the paint job that you're doing. It has holes and pieces of paint that are not on the wall. So it doesn't stick to certain parts. Is exactly what happens in the market. The market moves so fast sometimes that creates a hole in the price. And in the DOM, if you see it in the DOM, the price is not correct in the DOM. What the price needs to do in order to correct this imbalance in the market is going back and reprice it and then continuing its move. And this is why we see it time and time and fucking time again. This shit happening and time again. The price moves from FEGs, internal liquidity, to external liquidity, which is actually the top and the lower of the ranges. That's it. That's fucking it. And now we have a propulsion block being formed right here. And this is actually not good. Let's see. We have an FEG, but this level could be taken. I'm going to put the stop loss right here. Everything. There. All the three positions are there. And why? Because I don't want to see. Actually, yeah, I want to see this FEG being repriced, and from there on, I'll move the stop loss below this pullback. By the way, this pullback was just at the level. My mouth, my throat is gone. Right there. If you see the FEG, the way that the price took this FEG was right in the middle of the FEG, came back to it precisely, chirurgically, and then I mean, people say that you cannot predict the price, but if you see this, how can that be right? You're seeing it in your fucking face. How can that be right? If you can't predict the price, how would the price do this? I mean, right? It makes no sense at all. Time and time again, not once. It's crazy. It's crazy. It's fucking crazy. So, I don't know. I think I'm gonna pretty much. Let's see. This is the 1000 go here. Profit on that. This is the one that is also in profit. It's over 2 there. This is the negative one if it reaches here. All right. So this is the negative one. So okay, fuck it. I'll put it here. Oh, here. Fuck it. I'm not expecting it to go down. I'm expecting it to continue the movement, and it's a bit of space too. I mean, sometimes you want to create a tight, but this is a pullback, man. You see, this is the support real level of the pullback that should not be taken if the price is to go even further up. I will stand that if I take this, I will assume the loss, and I'm okay with that. I was wrong. If the price has a continuation up, this should not be touched. That's it. And then it's the idea. How do we know? And I was before we touched on the FEG issue. How did we know that the price really wants to continue down? Because we see it on the M1 market structure. It really looks like creating the downtrend, and what currently exists to support the narrative that it's going to continue making it a downtrend. Especially now, this is a propulsion block, and as of now, I would exit all positions actually because this this is a reversal to happen until we actually you know if the price goes above the FEG here, yes, this FEG here, and doesn't respect it above this, let's see, I'm talking M3, M3, see, if the price comes here and breaches this shit above this level right here, like fuck, it's too much shit in the chart. I would have a problem continuing with this position because it doesn't support the actual market structure, doesn't support the narrative that I have that the price is going to move further down. Or if it does, we're talking about this level here because this level here is the actual level of the pullback on the M15. And sometimes looking at the chart on the M1 level is good, is beneficial, and sometimes it's not. One of the problems that I see is that it's not very beneficial when, let me just change this here really fast so we can put it a bit, we can understand a bit more about the market structure that I'm trying to see right there. And then what we see the price creating a bullish, look at that. And this for me is an indicator that the price is going to move further up. You see? No, it's okay. No issue. So we have two options here. This is the M15 high of the pullback, and this is the M15 low of the pullback. We're seeing this is internal market structure within the M15. Let's see the M15. Did we reach the FVG on the M15 level, which is this guy here? No, it's right below the pullback. Actually, we touched it. You see it? This is why the price reversed. Look. This is why it's so important to correlate the time frames together. Look at that. I hope you see it right here. It touched it a bit, and because it's obviously on a higher time frame, a bull market structure. So on a higher time frame, and this I explain in the course too. It's one of the first modules, basic market structure and advanced market structure. So let me rephrase here what I'm trying to make across. This is higher time frame, H4. This is H4. Let's name this here. So this is normal pullback, going up, going up, going up, right? And what happens in here on the H4 is internal market. So now we're zooming into this area. So the market internally on M15 goes like this, reaches the top, breaks structure, market structure, to then start coming down. It comes down to a point that doesn't take this low, because in what we're seeing now here is this part, and it doesn't take the low. This is the low. This is the strong low of the trend. 4 hour. So on the 15, what we see is then a market structure shift here. And then we see it taking it. Shit. God, fucking shit. All right, so like this. This is to draw it is a shithole. All right. So it continues with the M15 trend, right? Now, if we see on the, so this is M15, and this is why it's so important to look at the market structure on different time frames. This is really bad here. There you go. Because then what you want to see is the market structure shift being respected. Oh God, not like that, like this. And what happens is, if you see the market, this is a break of structure, which corresponds to the normal break of structure. What we want to see is this break of structure being then applied to the M15, which is this, right? This part here will be this part here. And let me change the color of this shit to make it a bit more, create some emphasis on this. So there we go. So that's the fucking lower part of the trend on the H4. So what does this mean? That we are currently looking at the M15 chart. The 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 price reached the point where there is a POI, point of interest, which is an FEG imbalance, and then starts moving up. So let's correlate it with what we have here. We have a 4-hour chart where the price is moving bullish. On the M15, we see the price moving bullish, then coming down. This is where we entered, and reaches a point where it reaches an FEG, and then starts moving back up. Could it be that the higher time frame and mid time frame trend is bullish? And internally, what we're actually picking up is just this trend. which is in our trading model. And now let's open our trading models. In our trading models, this is a, I don't recall if it's a C or a D trade anymore. Let me see. Documents there. Where do I have there? Work, mentorship, market structure, screens. Thousands of shit happening here on my computer that you guys are not seeing, but it's okay. But let's put it on a bullish way so this can be perceived. So bullish trends. I think this is very good. Let's open this up. So what I mean with this, H4 and M5 and 15 is exactly what we have here. So this is the middle time frame week swing, and this is the middle time frame week swing. Here, this is the weak, this is the strong. Because if it's the strong and the market is bullish, this will never be taken. This will be the strong support. This is the strong support on M15 on the middle time frame. This is the strong support on an H4. Are you getting it? All right, so this is what we have here. What we have here is the actual phases that we normally enter from, the market structure for these phases. So this, we apparently, this is actually on, let me see, bullish, higher time frame. This is very good. Let me see, that's it. Yeah, okay, this is good too. Okay, now I want to see something that has some sort of correlation for the process. Let me just see. Screens and shit. I think market structure. Examples. And it's tricky, I think. So the actual. Yeah, let me see this shit here. Mid-time frames, no. Where are the fucking shots? Here they are. Shit. I knew it, I would find it. Here we go. So as you can see, this line here is the higher time frame. In this case, the mid-time frame, right? So what we're doing is actually comparing this to this. So this is exactly the thing. This is the protected low, you know, the strong low, which is this strong low. And the market is going to go and take the higher, which is this is the higher swing, making it pretty much a bullish trend. And here the same. This is a higher time frame, mid time frame being supported and taking the high. So this is really important to perceive. So because of that, I am under the impression that we're currently in a bullish trend on the mid and higher time frame on the dollar index, and we just reached by touching that FEG, just a tiny little touch was sufficient to have the new supported high structure. And if I am correct, the market is going to take this high because this is the new there. Let me see. You see, this is the new week high like this. So in a burst, this level is this on the price. This level is this on the price. And also this level is this on the price. What a fucking complex. Yeah? All right. So what does this mean? Practically. that we can confirm it on the 4-hour. Let's see what we have on the 4-hour. We have a massive bearish trend. We have a pullback only into the FEG for the rectification of that FEG, which we just saw, which is this guy here. And the price for me, there's a really good chance that for me is going to rectify this FEG, maybe even these here or this one here, later down the remaining of the week if it's feasible. Or it can completely annihilate or just touch this FEG here, this tiny bit, and then break out bearish. Because the structure of the market is bearish. You see, this is a 4-hour FEG, and this is the, well, this is the real 4-hour breakout for it to go bearish. So the price can easily do this and continue with the trend, the bearish momentum that it currently had. And if that's the case, this is supported and this is valid. We're really reaching new levels here on USD CAD. My computer just froze the whole thing, which is great because now I cannot do anything with the stop losses and shit, which is great. Nice. Let's see, M15. So on a H4, we have a bearish trend. For that to happen, we have the POI here of the 4-hour that it would need to reach, it almost reached here, in order to come down, right? This is what we mapped. So if that is right, now it's a good time for it to start coming down. That will make our euro US dollar go up. If I'm wrong, it will be important to do decision management right now and to evaluate the possibility and probability of this happening, and then or just exit the position, because if it's expected to reach here, this is all going to be taken out, invalidating all the existing trades that you currently have. So what will be the best solution from your point of view? Exactly. We need to wait and see what the market structure. It's not something that is assumed. It is something factual that is objective. We don't invent market structure data. Data is right in your face. With that, we can support our reasoning in our narrative. Without it, we are assuming and gambling. And that's, no, we do not want to assume jack shit. We want to see it happening. And that's it. And the same happened on the lower time frame. Reached the FEG on the M1 on 15. It started creating a pullback here. We did the pullback there. Rectify this FEG. And there's a really, this looks really fishy to me. This FEG is filled, which I really doubt, because this is a support level to take this high. There is a bullish momentum happening here. And if there's a bullish momentum on the M1, what you don't want to see is breaking out to this level. What you want to see regarding our trading is breaking out to this level and breaking the lower level of the lower low. This is the lower high. So again, this is all important, and this is the important part to have into consideration on this shit. And to understand, the question was, how do we know that the price will do what we expected? How do we support this ideology? We look at market structure, higher time frame, mid time frame, lower time frame. That's it. Don't invent fucking shit with alcoholics, stockaholics, and RS. Look at the fucking market structure, and everything will be presented to you. It's clear as fucking day. And the higher time frame is bearish. The mid time frame, I don't know. Let's see. It started. Well, it's still bearish. It started actually a bearish pullback, but it took this high here. And if it continues, if there is continuation on internal market structure on lower time frame M1, taking this high, there's a support to reach this high over there. And this continues the logic that this is going to be so the case. So it's pretty straightforward and simple. And I think if you map correctly all the market structure on the US dollar index, you can then correlate it negatively, for example, with the euro US dollar pair. And that has a confluence. There's no indicator that's going to give you that chance. No way. In retail, there's nothing like this. I've seen it in the European Central Bank and so forth, not in retail. That's it. I mean, you know, you know, in here, there's a liquidity sweep on this area. So there's a liquidity sweep of this area, which is this trend, created this high. And if the market has a continuation of a bearish move, then it's easy to assume that this is the strong high, the lower high on the mid-time frame, MTF lower high. This is just an internal market structure reversal within the lower high mid-time frame, and this is the lower low on the mid-time frame. When you have these things mapped manually like this, and you know this is internal market structure of lower time frame liquidity, then you start appreciating the effort that you put into the understanding of this. You see? Market structure on the M15, we're in a bearish momentum. This is the higher high, this is the lower high, this is the lower low. And it's signaled here. And inside of the M15 on the lower time frame, we have actually, well, this is actually just been, this would be the higher low right here, like this. Rangy, I don't know what that means, but yeah, for me, what it looks like is that there is a reversal happening, and the market structure on the lower time frame supports that the reversal is happening because it just created the market structure shift here. If this is the lower high on the lower time frame, and this is within a lower high and a lower low on the mid time frame, and we have a market structure shift right here, what does this mean? It means that the market is reversing. It is? That's bad. So, yeah, yeah. So, okay, the market is breaking this level up on, let me put it like more simple, like this. This is an M1 FEG inside of an H4 FEG. Double tap. So the market, there's a good way to see this actually. I can show it to you how to appreciate this in a different way, which is like this. The market created a high, created a lower low internal time frame like this, and now it's placed above, and now we have this. And now I'm going to show you something very nice. This here, well, this is like this actually. So there was a breakup structure here. For it to continue the movement down, this low needs to be taken in the actual M15 and lower time frame. But at the moment, what we see is the market trying to reach this FVG here on the M4 and M1. And because of that, this is the part that the probability take over, because we have no market, we have no visibility to other than what the market structure is giving us. And the market structure just showed us that it took a lower low, it made a new a higher low, a higher high, and this is going to be a higher low, and this is going to be a higher high within the internal market structure. So if that's the case, this is all going to be about to be reversed. If this low isn't taken. So the probabilities are not in our favor regarding this. And that's the situation, you know. You know. So that's pretty much the scenario. Uh, I'll leave this running, but I am very sure that it will try to reach this level here and then probably continue the bearishment, which is a fake out. And this is something that you guys need to perceive because it will allow you to, when I had 7,000 running profit in floating equity, to completely annihilate my positions at that point in time, preserving my capital and not waiting for this to happen, and only then perceiving that this is going to happen in the short of the moment, you know? So this is important. This is the most important part to understand market structure, you know? So H4 is bearish. H4 is bearish. M5, we're in a bearish trend. M1, we're in a bullish trend because we have a market structure shift that indicates that the previous lower low, lower high was broken. So the lower low was broken. What are we waiting for to be created? A higher high. This is a higher high. Lower time frame. Let me put it here. Higher high, higher low, higher high, higher low, higher high, which is the FEG, sinks. Why? What does it sink when it reaches the FEG? Because this is the protected high of the mid and higher time frame. Strong. It's not going to be taken if it continues bearish on the higher time frame. If it continues bearish on the higher time frame, this is the internal reversal that you see. When this happens, you have then the market structure completely achieved, and you will create an understanding that then this is a higher high, then it's going to create a higher low, and so forth. And then when it reaches a higher high within the FVG on the M1 and 15, it's going to create a new lower low within the M15 and H4 by using these. And I hope this makes sense because this is the most important part to perceive, right? It really matters a lot. This is the only thing that will accurately tell you the probability of the market going bullish or bearish. All the rest, stockaholics with alcoholics, with the RSI, crack my RSI, you can all show all the indicators and also a lot of funny things, and it's great to have the graphic, the chart all clouded full of shit. In the end, if you do not know the basics of market structure to correlate it with higher time frame, mid time frame, and lower time frame, and to understand the shit, do not trade. Because we just validated, and this is valid for now for all the pairs, because now we know what is expected or the probability of expectation for the continuation of a bearish momentum on the Dixie. If the Dixie reaches here, and now you can actually put a fucking alert here, add an alert, POI reached, you will receive an alert when the price reaches this point. At this point in time, when you receive the alert that the price reaches the fair value gap that we mapped on the mid time frame and lower time frame, you will then confirm with the market structure shift on the lower time frame that the market is reversing, and then target this shit correctly, probably with a massive RR. And even lower, because if it goes below it. Now, what does it need to happen for us to have this assumption? This is the part that we leave technicals alone. We did our analysis. We, as analysts, we analyze the probabilities of an idea. Let's correlate this trade idea just to finalize this with fundamentals. And I want to blow your minds on how to do this now based on statistics. We go to Forex Factory, and within Forex Factory, we just see at what time are we today. Today is Thursday. We have the unemployment claims coming out at 2:30 my time. So this Currently on my time it's 11:20, and so we are 3 hours from this to happen. So if we are 3 hours from this to happen, and we are here 5, we can easily say that we expect this to happen on a high volatility news. So 5 to 6, 6 to 7, 7 to 8, 30, right here, at this precise point in time when the price is the releases of the information of the unemployment claims are coming up, I expect the market to spike here to this FVG, create a spike, and then break this whole shit down. How do we know? We need to see the probability of this happening. What is currently forecast on the news? What is currently forecast? It has to be negative. So what is currently happening here? So unemployment claims. The previous week unemployment claims were 223,000 unemployment claims that were registered in Social Security in the States. The forecast for this week is more unemployment claims. Is this good for the dollar? No, this is not good for the dollar. The forecast exactly maps our ideology. The price is gonna fucking die because there's more unemployed people in the States if the reports we can open here, and the actual less than forecast is good for the currency, which we don't forecast that. So the price that is coming out, if it's below the 225,000, is going to push the dollar high. If it's above this number, it's going to push the dollar low, creating another confluence to our ideology. And with this, with technicals and fundamentals all together, market structure and analysis, then you have fucking trade to trade today. Regarding volatility and slippage that the brokers might instantiate on you, I recommend that you enter the trade after you receive the alert 10 minutes before at least the actual, or even better, pending order here. There you go. Target 1 to 10. There you go. It's simple, right? I hope this was important. The correlation of technical analysis and fundamentals, which I don't see anyone doing, and I think it's really fucking important. Don't trade on the news. No, trade the news, but be aware, do your analysis, and be aware of what the price might do. Have a trading idea sustained by market structure and all the fucking confluences that you have, and then link it to the fundamentals. And the fundamentals will, when this happens, will give you the time that this all of your trading idea will be executed. And at this today, it's at 8:30 New York time. And with this, pretty much in the session, it's so much beyond what I was expected to do, but it's the whole 9 yards of the actual training, right? So I think it's very productive. I'll put the video up and running for this to be perceived, and I'll leave this on. I'll pass you um, this trading confluence pretty much and charts, so we can actually review it. I'm not on the charts this hour, so I'll just put it in a position, a pending order, a limit order, and then wait for the price to come to these levels. I don't care. So that's the scenario. I'm waiting for the price to be lower for the dollar, so I'm waiting for it to even drop it further. The H4 shows us that. The M15 shows us that we're in exactly that, and we just need the M1 to validate that. That's going to happen at this hour, at this time, and these are where the reasons why. And I hope this makes sense when people say that you cannot predict jack shit. Have fun with that. I'll leave you with ideology, and have a good morning, guys. Yeah, I'm just shutting it down here. Yeah, there we go. Yeah, yeah, yeah. Yeah, it's a different ball game. I'll leave this running and I'll feed back and later down the road show how actually this actually sustain. Right. Super hugs, man. I'll catch you later on. Yeah. Study this shit. Cheers, guys. Bye bye. All the 3,000 of you. Cheers. Bye bye. Crazy. Yeah.